Good afternoon and welcome to the European crossover, or actually FX Daily Wrap-Up. And one moment. Actually on the cross rates, bear with me. Okay, here we go. We did go in and see the euro going and make a dip down here. Let's see, I think we had, bear with me. Okay, our bias chart support was for 1123. It looks like we made a run down there to 1131. And remember that key level was at 1130 on the daily close that we're looking for yesterday to open the door for the pair to move higher. And it did initially in Asia and partially in Europe. And then we saw the market going and pair back a bit. And we've seen the dollar index hold. This was an area that we're looking to hold for yesterday, which is 97.20. We had 46 and then 20. Today we have 97 even, but dollar still remains under some trouble or pressure. Tomorrow we do have non-farm payrolls. There might be a little bit of hesitancy before we let this thing go. Dollar yen was really has been the big mover overall. When you look at this, we saw yesterday post FOMC, we came right into that bias chart resistance, that pivot that we've been talking about. That's been in place since May of 2018. And you can see here, coming all the way back. We actually took it out by 1 pip, and then we turned around and rotated lower. We were still holding steady this morning, but we broke with the China news about the whole phase 1 thing, which I think is a bunch of baloney to start with. And I think really at this point now, the market's starting to call the bluff on this stuff. And you got to be, just keep an eye on stuff. I'll see tomorrow's NFP. So we'll see how much we can push, but obviously dollar yen's already, we're on the lows now. Like I said, we actually was looking on this. We actually had a bit of a gravestone doji here. The wick might be a little bit long, although the market was still bid. But then when that China news came out, we started pressing it. One thing you want to go and keep an eye on is on the SPOs, and we'll take a look at that quickly. So the key is going to be this 3023. This was actually resistance on the way up. And you can see that where the market kept pushing against this. And actually the first round up in here, I remember they were looking for different levels. And I mentioned when we had this first run, hey, this is resistance. And now we had actually backed off a little bit. But we reasserted ourselves. You can see how we stuck with it and we broke above it. Well, now you can see how that's become support on the way back down. If we lose the 3023 here on the S&P, this is on the cash, we should end up have the potential to go on and slide back down and potentially down here towards 29.92. So be wary of that. And like I said, I think after the market, you have to think about it this way. We added on so it looked like, hey, this market's going to keep on going. And there's a lot of people that have been talking about how this market would keep on going, and that a lot of people were trying to play from the short side, blah, 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 and why this market could keep pushing higher. And certainly coming into a rate cut, they probably thought we're going to still get some more good news. So the China news is really kind of the whole, not so fast on the phase 1 bit and all this other stuff, has really put a dent and really put the market a bit on the defensive. And once again, it's just about the levels. We talked about that. You never can tell where a market, how it's going to react to news, but the levels will keep you with your risk. So at this point, people that got long, let's say anywhere really up in here, 30.32 on up, and 30.38 was a little bit of a reactionary level. So they're thinking, wow, you know what? If we break this 30.23, and that was a previous high, then how far are we going to break? Where do I find support? 30.10? Am I going to ride this thing for a loser all the way back then? So that's what I'm saying. Be wary if it loses at 30.23. We could see a little bit of an acceleration beyond that. We already went past it, and the initial support here we had was an old one, which is 30.17. Sounds like old, not that old, but 30.17. But we didn't quite make it get there. But like I said, if we break that, we're probably going to start flying, lower, and then then you have the market on its lows as we go into the end of the week. And any kind of good news on the employment report, if it is good news, what if it comes in weaker? They're going to really, push them harder. And like I said, I think if we do lose that 30.23 on an hourly close, we have the potential to get down to 29.92. Crude oil has come off its lows. We actually came into an area here, which is a pretty good area here. It was actually the 50%. We actually dipped a little bit below that. But the crude had already been turned around and was struggling as the S&Ps were coming off. So we'll see what we can do. There's actually some good volume right there, 54.39, I think it is, or 54.34, and that's actually comes in with a 50% on the way back, or 54.39. I just was looking at another chart, but I took it off. But keep an eye on that. This actually, the market kind of paused at the 23% back a little bit right here, but we're still having like sold off. We can still make a run up there towards 54.43. This is an old one. This isn't the most recent one right now. So it's probably a little bit confusing. Let me just take that off. There we go. But coming back up, like I said, be wary right here around this 39-ish right in here. There's a lot of volume at that area. And it's going to be about a 38% back. So just be cautious. Like I said, if you start to see this boost start to going to drive down lower, then you probably see the crude going to come in, although they've been already had quite a bit of selling to start with. Moving back into the FX, into the cross rates, not cross rates, but the majors. Dollar peso is a little bit stronger. We still haven't been able to get beyond that 19.23.6. We've talked about that to the point you sound like a broken record. But you can see we went up there and took a stab at it yesterday during FOMC, and we got turned away. Now the market's trying to come back again. We'll see. But like I said, this thing has just been so weak for so long. Can we push a little bit higher? Maybe we could, man. The market's so oversold. It's not like as if, honestly, I don't see where people were thinking that was a bullish case there. And it's pretty much played itself out on the downside. When I say it played itself out, I'm not saying we can't go lower. Actually, today's bias chart support, I think, is 18.98. The point is that, it's not like as if we close up here and go, wow, now it's bullish. Well, look how long it stayed there. I mean, I don't know. I don't look at RSI or stochastics, but, it's been sitting there in the basement for a while. So I guess it is oversold. So could we get a little bit of a rally? Yeah, it doesn't mean it's bullish by any means whatsoever. And even if you get two consecutive closes above 19.23.6, doesn't mean it's bullish. All it means is that on a short-term basis, the downside's a little bit played out. Well, that makes sense if you spent nearly 2 weeks sitting below 19.23.6. You see what I'm saying? So that doesn't mean anything. You see what I'm saying? This market would actually have to get, realistically, to reassert the upside. There you go. You got to get above 1963 to reassert the upside. Because anything else is going to be, look for these opportunities just to go on and sell into it. Although it's oversold, but you can get a nice rally back up. Maybe even make it up here to 43 or something like that. That might be a good run for some people. I'm just saying is even the moves above here will be suspect. So, eventually could get there, but it may have a tough road to hoe before it does. It might be a lot of, you can see here how long the market's been struggling right in here. So we'll see what happens. Dollar CAD, pairing back just a bit after that strong move yesterday. We referenced it had almost made up here to the 50%, and then we paired back from there and actually had you see right there a nice candlestick to suggest a lower break. And our bias chart support for today was right there, 31.36, which was the level that we were looking for over a week ago or almost 2 weeks ago, if the market were to come back. So that's where we had our bias chart support. And actually, that's where the market stopped at 31.36. And we've come off of that. So come off of that 20 pips. The markets always remember the levels. It's all about the levels. I do try and factor in the, fundamental side. And the fundamental as far as economic news, and if it gives like a little bit of a flavor as far as what the market's leaning towards. But once again, the technicals are where the market, where you can assess your risk and levels that you can come in. I actually haven't done that much with FX lately, so I did miss a great opportunity yesterday with the dollar CAD. Cable, still keeping the bid. We actually got above that the bias chart resistance, which has been in place this week, 29.13. We're above it. So looking here with the cable, is right here, 29.80. And that's our bias chart resistance now, because once we close above, got past that 29.13, it's all about 29.80. We'll see if we can get past that, tomorrow on a closing basis, but that'd be huge. Resistance initially came at this 29.60. We actually got above that. And actually, look, you can see here, we've actually made a challenge up here to this 29.80. We backed off a little bit, but that's a huge level right there. Absolutely huge. Moving into the cross rates, we have seen the Aussie yen pair back, obviously with the strengthening of the yen, and a safe haven. Right now, we got the S&Ps at 30.22. So once again, keep an eye on that. You get past this 30.23 on an hourly close, it's really going to open the door for this market to start to potentially accelerate lower as we get towards the end of the day. Euro Aussie pretty much trapped in this range here, not a whole lot. Euro Kiwi. Same thing. Only thing I can see of any real significance right now is on the guppy, which has made a couple of runs up in here, and we are getting a little bit tired. We're actually pushing back down here into our bias chart support. I think it would come in at 39.66. We got 39.68 as we came into Europe, and that was our bias chart support for this morning. And you can see is the pink line. That's where we come. So we've actually worked down lower, and we've come in almost to make it to bias chart support here. So here we were in Europe around here. But we're starting to fade back in here. Once again, with the strengthening of the yen is actually weighing on this. But the one takeaway, and I'll go on and switch back into the indexes, is going to be, you see here now we're 30.21. So be careful. I think that can weigh a little bit on the crude, but the crude has been beat up all day long. We were looking at this in the European crossover webinar. And this is an area here that I was talking about, this 5650/55. And we actually came up there, dipped, and we came up, made a new high. And then from there, it's just been down, 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 honk the submarine horn. But we're trying to hold on. But like I said, keep an eye, as I said, with these equities. I think once you get past this 30.23, it really has the door open for a much bigger move lower. We did come into an area here on these futures. It made it up to, I was talking about 15.1650, and it actually made it to 15.1660. We paired back about $4, and then we started to reassert ourselves. Once again, we may get a little bit push with the weakening here of the spoos. You can see when we came on right now, we were at 30.23. Now we're off, or just under 30.23. Now we're off. We're now at 30.21. So we're off two handles, but we can be careful on that and start to accelerate. There's a supported 30.17, a level. But like I said, if we get an hourly close, I think the potential is for this market to get to 29.92 tomorrow, possibly. I think the market's basically calling the bluff on the administration. The signing of this phase one is just around the corner. I mean, if you think Brexit is bad, I think it's going to be in the year, 2022, and the phase one is just around the corner. So, but just be wary of that. That may end up weighing here and actually probably put further pressure on the dollar yen. But that's what we have for here. Good luck. And so don't forget, obviously, tomorrow's non-farm payroll. And once again, you may want to consider a trial period with ForexAnalytix. It's $1 for 10 days. Get a chance to get to go through the site and experience a different analysis, whether it be macro, basic technical, candlestick, harmonics, Elliott wave, as well as the webinars that we have during the day, and the chat room where, like I said, I think that's where to me, I think it's the real strength of ForexAnalytix. Obviously, other areas as well as the our data tool for real-time data needs, but when it's released. But once again, thanks for joining us, and good luck with the rest of the day.